Steve, going back a little bit further, one of the bits of unfinished business for us, I think, in the year end, I don't think we had a chance to comment on this program about the latest economic numbers. There was some good news, some slowing of inflation, and the Fed seemed to be slowing its rate hikes at the end of the year, leaving us wondering, has inflation really peaked, and what path forward for the Fed? I mean, I know a lot of people are saying, well, a recession is inevitable in 2003, and others insist that it isn't, and we'll know as we go forward. But are we at an inflection point, or are things likely to just sort of muddle along as they have been?
Well, clearly we've seen an inflection. When you go back to earlier, in the spring and summer of last year, inflation was running, 8 and 9%. I think that was the peak, is about 9. And the last indicators we saw, November, December, I guess we haven't gotten December numbers yet, but November, was down to 7. So yeah, from that measure, inflation has peaked. The Fed has suggested they're going to take their foot off. Well, they're going to slightly ease up on the brake. I mean, they were raising interest rates at 0.75 percentage point, and the last increase was only 0.5 percentage point. So, there's an inflection both in terms of the interest changes by the Fed and an inflection in terms of the CPI. But, anybody who watches economic data knows that just because the numbers go in one direction one time doesn't mean they're going to keep going in that direction. I mean, we've watched the stock market bounce up and down all year last year. And, the fact that the markets think the Fed is done raising rates, and it's just a question of, or not, they're not done. They're done aggressively raising rates at the rate they were. That doesn't mean the Fed can't or won't reverse course, nor does it mean that the Fed won't keep rates higher longer than what the markets expect right now. I mean, I'm still amazed. I mean, we have one of the largest inverted yield curves as we've had in a long time. I mean, you look at short-term rates, whether you're talking about the 2-year rate or the 3-month bill note rate, those are all above the 10-year rate. And normally that is a strong indicator of a coming recession. And, a lot of the financial press is talking about, 2023, we're going to have a recession, but the stock market doesn't act like it. The long-term interest rates don't act like it. So, there's a lot of mixed signals out there. And so, I don't, we're going to have to muddle through several more months to get clarity on, whether we really have turned the corner on inflation or whether this is a pause and, things are going to reverse, and or the Fed is going to have to keep things longer than the market expects. And, whether that'll ultimately trigger a slowdown. And, it could be a very mild recession, but, it's hard to tell.
It's a politically fraught situation because growth, growth isn't great, but job growth is great. And wage growth is, and the downside of that, which would normally be great news, is that doesn't help with the inflation question. And so, the good news isn't necessarily good news when you think about it that way, because the Fed may keep its foot on the brake longer. And I guess that's why people are talking about potential recession. But that's going to, increasingly, that's going to be a difficult political conundrum.
Well, as Troy mentioned earlier, there's always this tension between what the Fed thinks it needs to do to control inflation and what the Congress is either doing or would wish the Fed were doing. And, it's just the political tension of, everybody enjoys the party when it's going great and they want to keep the party going as long as possible. But, you have these countervailing forces, and, the Fed simply doesn't want to lose the credibility that it has built up over the last several decades. And if they let inflation get out of control again, it could damage their ability to run monetary policy in a convincing way. They could undo that, and it would be extremely harmful to the economy.